welcome. Daniel Rainey, Rainey Financial, Apex Advice. Thanks for joining us today. Appreciate you're busy, so you appreciate your time, mate. Daniel, I just want to learn a bit about your origin story to start. Just tell us how you found your way into mortgage broking and so forth.
Thanks for having me, John. My mortgage broking journey started 12 years ago. Before I embarked on the broking world, I was a bank valuer actually for a large firm in Melbourne, WBP. I was there for 10 years or so and had a great time there with many mates and whatnot, but was getting a little bit stale and wanted to start up my own venture. And what that looked like, I wasn't sure. And I bought a couple of little investment properties and used a couple of brokers to fund those. Al Baker from Aussie, and then a good mate of mine, Lee Delidio from U Financial, which is the company I ended up joining. I went to U Financial, started off writing loans for friends and family, and then got a good relationship with a few accountants and planners, and it just snowballed from there. And here we are, I think 12 years later. So yeah, with Rainey Financial.
12 years later, long journey in mortgage. And I'm hoping you can just, for those of us that aren't aware, what does a mortgage broker actually do, and how do they help in the home loan process, Dan?
Yeah, good question. We get this a bit. Mate, we're not reinventing the wheel. We're basically holding the hand of a client and educating them on the different lending options that are out there, helping them actually facilitate the loan application rather than walking into, ANZ Bank and having to do it all themselves. We're there to sort of hold them their hand through the journey, offer them real choice amongst the different lenders rather than, one specific product at one specific lender. Like I said, we're not reinventing the wheel. We use a mixture of lenders where we analyse the client's needs, their circumstances, and we match those objectives to the bank's criteria essentially. So we hold their hand from start to finish through to settlement. It's a journey where we try and educate clients along the way, and they tend to get great value out and enjoy the process.
Yeah, fantastic. Not so narrow in the scope in terms of who you use and so forth. You've got basically you've got a big menu of providers that you can use that you can pick based on features and rates and who will take certain occupations on even better. Is that kind of how it works?
Yeah. Yeah, it's a lot of our software helps us along the way too. But there's a big matrix out there of appetite for certain clients that the banks have at certain stages of their policy structures. So a self-employed client might be a fit for a certain bank as opposed to a school teacher PAYG client. A first homeowner, some banks have the tap well and truly on for that. Others don't want to borrow it. So it's really matching the client's circumstances to the different niches that the bank are offering at the time.
Yeah, fantastic. And you can even help before that part of the process, getting a sense for how much someone can borrow and repay and comfortably, so they can go and go looking for houses, with confidence. Yeah,
absolutely. So we like to hold the clients accountable for, what do you want to spend and what do you think is an ideal budget? And then we sit back and we basically reverse engineer it and say, well, if we're to get to this level, this is what the payments will look like. This is what you'll need as funds to complete and contribute to the transaction. And then, as I said, we then model out the numbers for the client to make sure they're comfortable with those figures. And then from there, we'll look at getting a pre-approval in place for the client, just to give them that peace of mind, rather than shopping for something they maybe not A, can afford, but B, able to obtain from the bank. So a lot of our clients go through that pre-approval journey, which is really educational for them. Not all of them convert, initially, but it's good to have that peace of mind for the client when they do eventually go shopping.
Yeah, I'm sure it helps with their decision making on such a big decision often. So what would you say that the key factors or points for getting the best home loan deal are with people? I know, interest rates and all that sort of stuff's really, really prominent at the moment, and we're all feeling the pinch at times. So what would you say the key things for getting the best deal on your home loan or investment debt?
Well, basically continually reviewing it, to be fair. At the moment, clients need to have a look at that home loan. What are rates doing? Is my rate competitive now? Something that was competitive 2 years ago might not be competitive now. And we see that a lot where a client, they go into a product that's a set and forget. 2 years later, we do a review for them and all of a sudden, hey, that's not the product that we initially had compared to market, we need to revisit things. So I suppose continually reviewing it's probably one of the most paramount important things for a client, making sure that you're constantly using things such as offsets and redraws correctly to minimize interest over the life of the loan, things like that, basically.
Yeah, fantastic. Just another one I hear a lot when I'm talking to people day to day is, oh, I'm earning this much, I should be able to get sort of X, Y, Z debt. But often something that is not thought about is this thing called a sensitivity assessment or a sensitivity buffer. Could you just explain what that is and what the banks are trying to do there, or the lenders are trying to do there?
Yeah, so just a quick snapshot on where things are at. Borrowing capacities since rates started to heavily move, where we had the consecutive rate hikes, they've come off about 40%. So, the client that could get $1 million is down to just north of 600. So it's a big haircut, borrowing capacities. The sensitivity rate, or the buffer that some people call it, if you're borrowing money at 6%, the bank will build a buffer in when they assess that loan. So if we're at 6, they might have a 2.5 to 3% buffer. So therefore, they're assessing your capacity to repay the loan at 8.5 to 9%. And we haven't seen circumstances like this for some time, certainly for a long, long time as far as borrowing capacities are concerned. So, what that means is when the client says, oh, I should be able to borrow it, I know I can afford it. Yes, you may well on paper think that you can afford it, but whether the bank are going to rubber stamp that with their buffer is up for debate. So it is hard to borrow money at the moment. It's probably too hard. It was probably too easy. Somewhere in the middle is about right, I think.
Somewhere in the middle, yeah. And is that sensitivity, is that a standard thing in across all lenders, or does everyone have different policies and thoughts on the sensitivity?
So there's a few. All the banks have the buffer. There's a few banks that are implementing or have over the journey implemented what they call a 1% buffer. There's really strict criteria to meet that buffer. The deal's going to be really vanilla, to be fair. So, there is an easing of that criteria, some might say, but most deals, 8 out of 10, are sensitised with that rate.
Yeah, okay, fantastic. And what about things like, you hear about credit scores, and I've heard you talk about good conduct a lot. How does that stuff impact your ability to get debt and credit? And what sort of things do you generally like to be seeing or not seeing with regards to conduct and credit?
Yeah, so credit score is a big one. What we do when we meet our clients is obviously we go through an engagement process where they come through our compliance and credit guides and etc., privacy statements, etc. And that enables us to then go away and conduct a credit report for them. So we'll push the button on that credit report just to see what their conduct has been like on all their facilities over the journey. So every time you embark on a lending facility, it will be on your credit score, which is your comprehensive credit score. So we can see credit cards, afterpays, personal loans, home loans, car loans, the work, and it shows us the last 2 years' conduct. And what I mean by conduct, has it been paid on time? Has it been paid at all? And is it in arrears? Now, anything that hasn't been paid on time or that's in arrears is starting to become alarm bells, and will make life really hard when we go to a bank to try and get additional funding or any funding at all. So credit scoring is really important. It's probably never been more important that people keep on top of their commitments, in the fact that all the banks actually share the data now. So back in the day, banks wouldn't know if John has defaulted on his car loan for the last 3 months and we're going to a different bank. They wouldn't know. But now they share all this data through the CCR, the comprehensive credit report.
Yeah.
So it's open slather. They can see everything. So it's probably never been more important.
Yeah, okay. So that's all shared on the back end and easily identified. Yeah, cool.
Correct.
And is that including just even things like bills, like phone bills and so forth? Or does it not go to that level?
Doesn't go to that level for actual monthly commitment payments. But if there's defaults or arrears and that entity decides to place it on their credit report, you'll see it as a default. So yeah, it can be critical to an application seeing, Telstra arrears, et cetera.
Okay. Fantastic. And what about the different types of home loans you can get out there, or investment loans? What are some of the things that is generally seeing, the things that you can get? in terms of features? What are you generally seeing as best practice out there?
Well, we see a lot of mum and dad stuff, obviously, the owner-occupied home, which essentially at the moment there's not many, well, not many people are writing fixed loans. So the vanilla deal at the moment's a PAYG owner-occupied loan with a variable product with a sharp rate, minimal annual fees with some offset functionality. Some banks will offer one, some will offer multiple offsets. So just little things like that. Self-employed loans where we might have to do some low doc stuff if financials haven't been prepared and completed, etc. So we write some of that stuff. Investment loans, obviously, investment can be twofold. It can be the actual investment property loans, or it can be similar to some of the stuff we do with you with some debt recycling, where we basically apportion a loan split against the owner occupied home to then invest in shares and other investments that you might see fit. We do a bit of SMSF over the last 3, 4, 5 years. That's becoming popular for a lot of clients. And also asset funding. So obviously cars, trucks, machinery, etc. So that's basically a broad suite of what broking products look like at the moment.
Yeah, very broad spectrum things you can get debt for. Yeah, and like if you were talking to someone and they were getting organised to go through a process with a mortgage broker, what sort of is a couple of tips, general tips you'd give to give them the best chance to succeed through that process, just in terms of getting information ready and so on and so forth?
Absolutely. Yeah. So good question. One of the best tips would be to make sure that, as going back to the credit score, making sure your conduct's in order. So credit cards, personal loans, all that stuff, payments are made on time. If you can, and not everyone can at the moment, try and reduce those facilities. $20,000 credit card limits versus a $3,000 credit card limit can make a massive difference in the actual borrowing capacity. So having external consumer debts, so let's call it, and high limits on those debts will really impact your borrowing capacity and your ability to borrow money at all. So reducing those to manageable levels is probably a good idea. Basically that's about it, and making sure you've got all your info available. So what do your living expenses look like? Are they realistic? Are we spending too much money on X, Y, Z? So just reviewing your budget basically and having a look at what is going out the door per month. And is that something we can tighten up if we're looking to borrow to make sure it gives us every chance of obtaining the lending that we require.
Yeah. And just to go back to what you said around credit limits and credit card limits. So can you just explain for someone that has a credit card but they don't know anything, how does that impact your ability to get debt?
Yeah, good question. So often we get a client who will say, "Oh, I've got a $20,000 Amex, Dan, but I don't use it, and it's got zero on it." Well, that's fine, and that's great that you don't use it, and it's got nothing on. But the bank always expense that out as if you can actually go tap away tomorrow and drag that limit right up and have all of a sudden a big noose around your neck as far as the commitment's concerned. So whether you owe nothing or you owe a heap, they will always expense that out as a facility limit ongoing. So as you can imagine, when you've got 1, 2, 3, 4 credit cards, and we see clients with 50 grand credit limits, that can really, really hinder your borrowing capacity. So reduce all those facilities if you can within reason. Will maximise your ability to borrow money essentially.
Yeah, fantastic. And is there any in terms of like people with the home loan going directly to the bank that might be struggling, is there any what sort of tips would you give someone? Can they contact the bank themselves and ask for assistance? Like what sort of things would you, that's been in and around loans for a long time, what options are available to borrowers?
Look, I'm biased. Use a broker while walking to the bank and explore their products and their products only. You might not fit their products. You might be a self-employed client walking into a bank who have no appetite for a self-employed client. So by using a broker, we know exactly who has that appetite, who has that policy niche at the time. Constant changes, so we keep on top of that. So I feel, again, without being biased, using a broker is significantly important in making sure that you don't waste time going to a home that's not going to give you the funds. Let's use a broker who will basically shortlist those funders that will give us the money and essentially hit their criteria. So my advice would be to use a broker and make sure that you lean on their expertise to get you the deal you want, and hopefully the best deal as well.
Yeah, fantastic. And I remember when I was a young tacker listening to, I think it was a CommBank ad or a banking ad, and they were like, there was this phrase, it was unlock your equity today or something like that. And can you just explain like what that means to unlock your equity and how you actually go about it? You did touch on it before, but just sort of help us understand what it means to unlock your equity.
Absolutely. So let's say you bought a property for 500 grand and you owed 400. So there's 100 grand of fat in that between what you owe and what it's worth. That property is now worth $1 million and you only owe 300 now on the property. So 300 to $1 million, there's 700 grand of equity there and now that you could tap into. Now you won't be able to obtain all 700 grand of that equity because the bank will be too exposed, but there is a level that, depending on borrowing capacity, again, that we could essentially unlock. So we might take you up to a 500 grand loan, unlocking 200 grand for John to invest or to potentially buy an investment property, to use on renovations, to buy a new family car. So basically an equity release is tapping into that equity in your property that you've built up over time, either via growth in the market or paying the debt down over time. So releasing that equity is essentially just tapping into that equity that you've built up and releasing it for whatever purpose or need you require.
Yeah, fantastic. And just in terms of what sort of red flags would you be seeing for people that are, using going for loans or using a broker? Are there any sort of common red flags or mistakes that you're seeing?
Spending's a big one. The banks they've softened a little bit with their critiquing of living expenses, but it's still a significant part of a loan application. So really trying to get on top of your spending habits. If you do have something that you're looking to apply for in due course, you want to make sure that you are doing a budget and just see, okay, what are the bank going to see potentially when I do go for my loan application? Are we spending way too much money on discretionary spending, so to speak? Do we need to tighten the belt a little bit? So that's probably the main thing. Again, going back, conduct, making sure your house is in order with that sort of stuff. But they're probably two of the most paramount things that you need to work out, I think, at the moment anyway.
Yeah. Good conduct if your day-to-day is important. All right. Well, thanks a lot, Dan. It's been very valuable insight. You're my personal broker and helped hundreds of people I've worked with for a number of years. So I know you know your stuff. We'll certainly unpack a few things in more detail as the months come, I think. But it's a good intro to why you think the way you think and your experiences today. So thanks for taking the time.
Good on you, John. Appreciate it. Thank you, mate.
Thanks,
Cheers.
mate.